getting in.
Good morning, viewers and listeners. Welcome you to the insurance segment. With me in the studio, I have the pleasure to introduce Mrs. Omenago Odia.
Well, viewers, it's always a pleasure to be here. And thank you for your time. We appreciate you.
Yes, we'll talk straight today, just the two of us. Our quote says, every day may not be perfect, but every day has a purpose. Insurance is your best partner. Mrs. Omenago.
Well, I want to look at that quote from the angle that each day we get is a gift, because not everybody who had the privilege of yesterday that is here to see today. So it's a cause for thankfulness. And God is also saying, I'm giving you an opportunity to do the things you're supposed to have done that you didn't do. So if you have not taken your insurance, you're having another chance today.
That's a very wonderful one. The chance of taking insurance is not limited. You can take it anytime, any day. Just call on us. And we also want to use this opportunity to say that those whose claims have not been settled, we are still on it, and by the grace of God, an answer will come shortly. And when it comes, we'll also announce just like we have announced in the time past. Now, we are going to talk about policy limits, what we need to know. When insurance companies pay claims, what are the considerations? How do they pay such claims? What inform their opinion in making such payments? Ms. Odia, I think it's important that we make this clarification, we make this known to members of the public. What is the consideration on the part of insurance companies in wanting to make a payment to a policy holder? Is it looking at the face of the policy holder to say, this one, you don't have money, you have money. This one, we should have sympathy for you or no sympathy? Are we looking still at the principles and practice of insurance as it were?
Well, just like any profession, insurance too has its principles and guiding rules. So these are followed. So in paying claim, different factors come into play, but a major one is the limit of sum assured. That is taken into consideration. So usually, as the policy takes effect, the sum assured is indicated. So that determines what is paid when it's time for a claim. So it's not like we're saying, oh, I like the face of this person, I don't like this, so I'll pay this, I won't pay this. We're guided by those rules.
Yeah, okay, if we relate it in terms of giving an example, how do we say a sum insured is? Is the sum insured just my consideration? Is the sum insured in a life policy? What informs the position of a sum insured? Let us use the case of a life policy and then probably a general accident case, a general insurance case.
For example, somebody takes a life policy and the sum assured is 5 million. So in case of the unforeseen happening, is that 5 million that will be paid. So from the beginning, for a life insurance policy, the sum assured is already known. There's also, for non-life, there's also a limit of cover, which is within which the insurance company will work in terms of payments.
No. Okay, if we look at it, you say life case 5 million. Is it the age that determines the value that is taken? What informs the opinion of the policyholder in choosing the sum insured? Is it that, okay, age 20 to age 30 is 5 million, age 30 to age 50 is 10 million? Is that the basis?
The premium you pay based on different factors like your profession, your age, all of that come into place, and then that helps the insurance company to tell you how much you're to pay for a certain amount of cover that you want. So you can take what value you want for yourself and your family.
Yeah, the convenience of the value is what I'm concerned about now. You just mentioned the point value. Value is the sum insured. Is it not based on the salary the person earns? Is it going to take a sum insured because people are taking sum insured of 10 million? Let me also take 10 million naira. Whereas your salary is 5,000 naira. How do you pay a premium of 10,000 naira in a month or thereabout? So these are the considerations that I think we ought to really look at. So the basis of taking a value or a sum insured is on the strength that this is my salary.
This is what I can afford.
This is what I can pay conveniently.
Yeah.
It's not on the basis of you are struggling to pay it. It is like a reserve after all expenses so that it becomes convenient. Now, in the case of other classes of insurance, like you mentioned, a chosen value is taken. If a vehicle is worth 1 million naira, it is the 1 million naira you are supposed to insure for, because you bought it with 1 million naira. And in some cases, you have some accessories you build into that vehicle. And if the accessories cost 200,000 naira, it means that the value of that particular vehicle is now 1.2 million naira. And you have receipts to show for that particular 1.2 million naira. So that is the informed position of taking a sum insured of that particular vehicle. So also in your shop, if you run a shop where you sell goods, the stock you have in that particular shop informs the value to place for insurance. In some cases, you take an average. When the stock is fully loaded, probably you have 5 million naira in that your shop. If it is not loaded, you have probably 4 million naira. So to have an average means that you probably insure for 4.5 million naira. At any given time, if the shop is not there with stock, it will be in that range. So that informs the position of the stock that will be taken. Now, in terms of settlement of a claim, what is the basis of a calculation or the consideration? Like you said, in a live case, what you have chosen becomes a known figure even before the time actually comes. So how is that placed?
Well, like we said earlier, a lot of factors come into play following the guiding principles of insurance. So all of that was what you can afford, but we usually advise that you insure for market value of your property or whatever. Because if you underinsure, we also use that to make your payment. And when you get to the market, it will be difficult for you to get back to where you were before loss. The essence of insurance is to say that we want to put you at the position you were before the loss occurred, so that your business can go on, life can go on, the family can still be run. So we advise that insure at market value, so that in case of loss, you don't shortchange yourself, because the insurance company will look at what is in your policy document and make payment within your sum assured.
Yeah, I think that's a very interesting one, Madam. The life policy says that there are two conditions precedent to a payment that will be made. If you live to the time of the policy, at maturity, you are entitled to that payment of the value you chose, say 5 years or 10 years ago. And the other one is that if you die before it, automatically the policy matures. Yes. And then there is a beneficiary named which will benefit from that particular policy. Either it is a 50-50, if there are two persons mentioned. If it is one person, it's 100%. So in that particular case, there is no way it can be changed. 5 million was chosen from inception. And when it matures, 5 million naira, in most cases, plus the interest that have accrued on that particular policy comes into play. And in case there is a debt before that particular time, the 5 million naira becomes automatically payable. It's not even going to wait till that time that is expected, because what that money is supposed to do is to make that family not suffer any loss. But in terms of property that we are talking about, there are so many considerations, and I think that is where we are going to start next week, in talking about the considerations and how it will be arrived at. Well, thank you for watching. God bless you, and have a wonderful day.